Now we have an industrial presentation on basically digital banking, the future of digital banking in India. And we know that banking is one of the important aspects, critical aspects of administration. We talked about the financial and the way UPI has progressed. So digital banking is a critical part, and to know more about some of the technology behind this digital banking, it's my pleasure to welcome now Mr. Praveen Khanna, Vice President of ScoreMe Solution, to talk about paving way for India's digital banking future. May I request Praveen to come on?
All right, thank you for giving me this opportunity for sharing my views on how fintechs are enabling use of financial statements in the area of paperless credit and digital lending. I'm here on behalf of an organization, a fintech called ScoreMe, and we are essentially in the area of paperless credit. So I wanted to take this opportunity on sharing how the role of fintechs and how they're playing a role in partnering with banks and NBFCs in analyzing credit and reducing systemic risk from a lending standpoint. Now, before I share what's happening in this segment, just a quick take on a personal journey. So the year was 2002 when I had applied for the first time for a home loan. There was no digital platform to disseminate any information on the loan process, what kind of competitive rates were available on offer. There was no way of comparing financial institutions. The process itself was paper-based, so I had to share bank statements, all my income tax returns in paper form, and there was frequent back and forth between me and the banking institution. And as a consequence of this lack of communication and time, it took more than about 60 days for my loan application to get processed. So those were the times that I lived in. Now, if we circle to today, those times have changed remarkably with the advent of fintechs. Digital banking and fintech is more or less omnipresent today, right from wealth management to insurance to payments to RegTech to digital lending. All of these areas are becoming more and more popular. Just to share a quick perspective on the phenomenal growth of fintechs in India, one estimate is suggesting that in the India fintech market is expected to grow to almost 8.35 lakh crores as compared to 2.3 lakh crores in 2020. This expanding at a CAGR of 24.5% annually. So India today has the third largest number of fintechs globally after China and US. We have the highest adoption rate of fintechs. So given our demographics, we have an adoption rate of almost 87% as compared to a global average of 64%. The number of digital transactions is expected to rise to almost 72% by 2025 and is going to exceed the paper-based transactions in banking terms. So paper-based transactions in India will be only 28% by 2025, whereas the digital transactions will be 72%. Now, in my view, there have been three phases of digital financial services in India. The first phase was from 2014 to 2016, with the growth of Jan Dhan accounts and payment wallets and with the advent of UPI. The second phase from 2017 to 2021, driven largely by UPI. There are now nearly 250 million UPI users in India. This is expected to grow to almost 750 million in the next 5 years. Even on the merchant side, this number is expected to double from 50 to 100 million. So there's an expected 10x growth over the next 5 years. The third phase, which I believe we are now in, that's being led by fintechs, digital banks, and neobanks. And what's being called as the account aggregator model. So this new model that's emerging where you have financial information providers and then financial information users at one end, and there'll be this pipe that will connect the two sides. It's being called the account aggregator. So the next phase of financial inclusion is going to be led and driven by this model. Now, customization is clearly key from an India standpoint. My view is what works in India is the phygital approach. So banks will be acquiring customers digitally and servicing them physically. At the same time, the reverse is also true. Acquiring physically and servicing the customers digitally. Therefore, digitization will help alleviate costs both around the acquisition of customers, the credit underwriting process, and finally on the monitoring and the collection side. So there are several new models that are emerging. There's the new model called as the buy now, pay later. That's being now used both for SME lending and also for retail lending. The existing BNPL market in India is worth about $3.5 billion and is expected to grow to almost $50 billion by 2026. So the expected number of BNPL users itself in India, that may rise to almost 100 million from the 10 to 15 million currently. So we are literally living in the digital age. And as I said, the new model that's being proposed, and the government's been very, very supportive in this segment. It's called OCEN. It stands for the Open Credit Enablement Network. So data, as they say, is the new oil. And therefore, for loan service providers, and essentially all the non-financial entities who have substantial information, they will now become the agents for the borrowers. So for instance, let's say you have a Kirana tech app, or if you are a Swiggy or a Zomato, you have all the information about all the restaurants in India. So players like us who basically do analytics will work with players like Zomato or Swiggy. They have all the information on the restaurants. We will do the cash flow-based analysis. And so a cash flow-based lending model will be emerging. Basis this network that's being called as the Open Credit Enablement Network. So just a quick word about ScoreMe. I basically work for a fintech called ScoreMe Solutions. We are essentially in the area of paperless credit. We are parented by a tier 1 merchant bank, the banking firm. And so we are essentially a banking firm that has adopted fintech. We have a team of about 150 odd members based across 6 cities in India. And we work with about 200 plus financial institutions in India. Most of these banks and NBFCs. So our model essentially is to enable digitization across borrower identity validation, eligibility checks for SMEs, corporates, and retail borrowers, document e-processing using e-sign, e-mandate, e-stamp, and then what we are also doing is we're building end-to-end digital lending platforms. Our algorithms allow for automation of the risk underwriting, and then post the loan dispersal, we can also do the monitoring so as to check for any potential NPAs. So there are multiple multiple financial statements that we analyze and that we use to make the process paperless. So there's bank statements, which are basically used to understand what are to get insights into the credit and debit transactions, what are the kind of in-house related party transactions that are happening, what's the cash flow, what are the existing loans, EMIs that the potential borrower is already serving. So it gives a complete in-depth view from a cash flow-based perspective. There's company information report. So basis the MCA data, we can do a complete analysis from a balance sheet, a P&L standpoint. We can do ratio analysis. There's GST-based lending that is now emerging. So along with analysis of sales and purchase data, this report can help analyze and identify what is the concentration risk on customers, what's the concentration risk on suppliers, what's the geographic concentration risk, what's the seasonality of the business. All of that analysis can now emerge via GST information. And then we also do data aggregation, so any KYC checks, checks across utility bills, Shop and Establishment Act, checks for any manufacturers via the IDEM portal. All of that can be analyzed. Finally, to give you a quick perspective, this is a typical example of how we would automate the process of SME lending. We would basically do analysis across bank statements, GST returns, and basis our rule engine, in under 30 minutes, banks will be able to take the loan eligibility decisions. We've also recently built a very interesting offering called as Sampan. It stands for Simplified Analysis of MSMEs using PAN. So just using PAN, we can access information around GST, legal information, financial statements, and then we can combine it to generate signals to the bank branch on go, no-go for loan auto renewals. And finally, we've been also building platforms for digital lending. So just to quickly summarize, our idea is to fuse human intelligence and data from financial statements into digital machine learning models. So the idea is to reduce risk, increase operational efficiency, and enhance transparency in lending decisions. We are able partners in digital journeys for banks and NBFCs and financial institutions, and our idea is to make the lending decisions faster, paperless, and seamless. Thank you. Thank you.
Thanks, Praveen Khanna, Vice President, SCOME Solutions Limited, for sharing his presentation.